The Bleaves Crypto Show. My name is Bleaves. We're here to talk about this crazy crypto world, and we got a lot going on. Jane Street just dumped again. Jane Street, which is one of the largest market makers, again at 10 a.m. every single day, starts dumping into the market. This market was up $50 billion just a few short minutes ago, now down $15 billion. What are they trying to do? Well, I'll tell you in just a moment. Also, Aave protocol could be in trouble. There's some real questions that got raised in the last 48 hours from people inside the system, if you will. The allegation is pretty damning. In fact, Aave is now questioning why the money that should be going into the community pool for buybacks is actually going into the pockets of the developers. Vanguard has offered Bitcoin, but calls it digital labubu. And they're digital ladum-dum, okay? Vanguard having trouble retaining some of its investors over an extended period of time. The maxis, the gold people, the silver people, they're still there. But digital assets, the smart people, they're getting out of Vanguard. So Vanguard's now offering Bitcoin ETF exposure, but they're not happy about it. Ethereum price is set to rebound as a prominent whale just accumulated 119 million after the dip. JP Morgan has come on-chain. They've launched an on-chain fund. Institutional tokenization on the Ethereum blockchain is continuing. The world's highest IQ holder now projects XRP going to $100 in the next 5 years. What a big move. And to cover the end here, Michael Saylor strategy buys 10,645 Bitcoin as the crypto market braces for the Japanese rate hike. What does he know? Why does he think he should buy it today as opposed to buying it after whatever dump is coming because of the Japan rate hike? We're going to talk about all that and more. It's not financial advice. I'm always right.
It's your boy Bleaves. Everybody listen up. Let's get it. I'm trying to put money in your pocket. That crypto wallet. That bing bada bing ching ching big profit. Even when the market's sideways, I'm looking for ways to get paid. I'm checking my coins around breakfast, then again around bedtime. Bet this, it's not financial advice, but I'm always right. 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 I'm always right.
All right, guys, good morning to everybody. Make sure you hit that like button on the way in. Let's talk about what's going on in this market. Good morning to George. Good morning to Latama. Good morning to Roy G. Vader Prime. Curtis, good morning to you. And Mike Volmer, the Mod King. Welcome to the show, everybody. So let's talk about what's happening here right now. We're going to start off with the big one, which is probably the thing that's going to affect the markets the most. And that is the Bank of Japan rate hike. And what does that look like right now? Bank of Japan rate hike could trigger a 20 to 30% Bitcoin decline as markets price a 98% probability. Now, that's alarming. That's concerning. But I also want you to think just for 1 second here. I want you to take just a moment and consider one important thing. Hydrate. And that is, if everybody thinks it's coming, everybody's going to short the market. If everybody's shorting the market, where's the liquidity? The liquidity is to the upside. So what is happening right now? Look, this is going to be my opinion. This may not be your opinion. And by the way, I may not be right on it when I say this. All right. But we got to talk about it because this is a little bit dangerous. Okay. If the market dumps 20 to 30%, there are going to be a lot of people shorting this market who are going to get absolutely fabulously wealthy off of it. And if that's the case and everybody starts shorting the market, Why would it go down? The purpose of these ghouls and goblins, as I continue to call them, a lot of people are saying ghouls and goblins. I made that up. I invented that. Didn't exist before I said it. These ghouls and goblins, the Jane Streets, the Wintermutes, all of these market makers, their entire job is to attack you and destroy your profitability. Okay, some people get drug along. There are a lot of people who make money. They get drug along with the price action as it goes because they make the right bet. But if everybody is shorting the market will not go down. It cannot go down because the liquidity is now up here. So in order for you to grab your liquidity, price has to go up. And these guys are market makers. These are guys who their entire sole job is to trick you into doing what they want you to do. Now, what do they want you to do? Well, look no further than a place like Yahoo, who is struggling financially, who's looking for a reason. They're looking for survivability. So what do? You get bought in. You get bought in, you get hooked in, you get rooked in. They tell you what you should be thinking. And now all the smart people are saying to themselves, oh, Bank of Japan, rate hike's going to trigger a 20-30% decline. If I 10x that's going to be a 200 or 300% gain. Woo-hoo-hoo. And they start dancing around. But guess what? If that happens, everybody makes a ton of money and they pull the liquidity out of the market. But they don't want you to do that. They don't want you to do that. They want to do that themselves. This is a plant article telling you that this could happen, and oh noes, you could be in serious trouble. Oh no, mister, I'm scared. And by the way, when you come over here and you look at BOJ rate hike priced in, Bank of Japan could trigger 20-30% decline. BOJ signals rate hike bar is cleared with wage momentum contact. Japan business mood hits 4-year high, keeps alive BOJ rate hike. Market braces for BOJ rate hike amid stubborn weak yen and wage growth. Going down the list, by the way, as you start looking at it, here we go. CCN, why Japan's next move could send Bitcoin into free fall. Wink, wink. All BOJ watchers see rate hike next week as hiking cycle resumes. Yen carry trade back in focus as BOJ rate hike looms. They're scaring you. They're scaring you in the market. What does that normally mean? That means that the direction that they want it to go in, it's going to go in the opposite direction. They want you to get trapped. So they're going to try to put you into the market. They're going to try to get you to throw your investment to the wolves. Okay? Like they want to eat. Now, here's the other part. The reason I put up here priced in is because I saw an article yesterday, and they were talking about a Bitcoin price braces for 75, again, bankless times, brace for 75K. And here it is. Crypto Quant yesterday says, has the BOJ rate already been priced in? On-chain data suggests the sell-off came first. Now, what are we looking at in the market right now? Down $17 billion. Let me turn that off because I don't want you guys to see that until I get paid for it. But I got a new indicator. For those of you that know, I've never been a fan of Levi Reitfeld. That's the guy who he was Crypto King, I want to say, something like that. He was doing Terra Luna Classic a couple of years ago, telling everybody that it was going to $1 and it's probably going to go to $10, et cetera, right? Well, he's developed a tool for telling you it's a market predictor. Is it right? I don't know. But I'm going to be testing it for the next couple of days. And if I like it, and by the way, so far, I really like it. But if it is, then I'm going to give you guys access to it. It'll be in the description down below. Just like Track My Trades. If you're looking for something to track your trades, Track My Trades is down in the description below. If you want to trade, KCEX over here, Weeks over there. So certainly you can go check those out. But you know what? I'm going to go ahead and show you. I'm going to show you. All right, this is called Crusader Signals. If you haven't already, this gives you sell strength, tells you how likely it is that you need to sell your crypto or how much you need to buy your crypto. Now, it does work on all time frames, and you can see right here, it's pretty simple. When it gives you a buy signal, it tends to rip. When it gives you a buy signal, might take a while, but it tends to rip. When it gives you a buy signal, it tends to rip. Now, this is only on the 1 day. When you look at it on the hourly, then guess what? you got a buy signal right over here. Your buy signal gave you a big move. By the way, a big move ended up happening here from where was the buy signal? Buy signal was set right here, and you had a 13% gain off of it in hours. So when this thing mints a buy signal, then you should know that it's pretty accurate so far. You can see here. Now remember, I've given you projects here that have given you fake outs, and that doesn't mean that there aren't fake outs. And the reason that I say that is because it's going to tell you by strength what should be happening here, okay? So it gives you a buy signal here because it feels like the market is about to go. Then it's going to give you a DCA opportunity, strength 2, as the price goes down. Then it's going to give you a DCA opportunity. So don't go all in when you see strength 1. But if you do, it tends to work in the positive direction. So again, we'll be talking about that over the next bunch of days, but Crusader Signals seems to be pretty good so far. It's got a 90.7% success rate at this point. So, but I digress. Bank of Japan rate hike has already been priced in. Now, the current market data says that they've already priced this in. Funding rate tells a similar story. During past rate hikes, funding rates dropped sharply around the announcement as long positions were flushed out and shorts became dominant. Today, funding rates are already declining and unstable, indicating leverage is being unwound in advance. So they're already predicting by the way, again, news, they're trapping you. You're getting trapped right now. I got a feeling that this market is about to surge in order to wreck a bunch of people who are following the news and thinking that they're the wink wink smart guys. So be watching over the next couple of days. The Bank of Japan announcement is going to be on Friday, December the 19th. So now listen to what this says right here. The crypto market is exhibiting dangerous levels of complacency regarding the upcoming Bank of Japan interest rate decision. This event is not a routine central bank meeting. It is a structural liquidity catalyst that has historically led to aggressive deleveraging in Bitcoin. Japan, as the largest foreign holder of U.S. treasuries, exerts immense ripple effects on global dollar liquidity and the appetite for risk assets like Bitcoin when it adjusts rates. The consistent pattern is brutal. March 2024, rate hike was followed by a 24% Bitcoin drop. The July 2024 hike saw a 25% drawdown. The January 2025 hike triggered a 30.54% correction. This phenomenon is driven by the unwinding of the yen carry trade. Years of cheap borrowing used to fund higher yield asset purchases, including crypto, immediately reverses course when rates hike. So this is when it happened over here. You can kind of see each one of those lines right there is exactly where that drawdown happened. Didn't happen automatically, but it happened over the next couple of weeks. Now, these are weekly candles. So if you just grant here that we're talking March 19 of 2024. So if we were to go to a, let's remove that and look at Bitcoin on a weekly time frame, and we go to March of 2024, and we were going to March 19 of 2024. So there we go, right here. All right, so we get this candle. This is March of 2024. What is the drawdown on Bitcoin? The drawdown on Bitcoin goes from here down here. So we get that 28, 27%. I don't remember what they said is the drawdown, but it's in the 20s, around 25%. How long did that take? That took months for it to happen. That bottom didn't come until August. So is the Bank of Japan the catalyst for that? That is a real question that you have to ask. Now, July of 2024, oh, there we go, 24% drawdown, and then the Bank of Japan again did the rates again, and it became a 25% drawdown. Now, I want you to look here. What happened right after that? We had a sell-off and then a massive upside move. So I think that people are overestimating some of what's going on with this Bank of Japan move, okay? January of 2024, same thing happened. We got, within a couple of weeks, we got this big move to the downside. This was January 2020, right here. We got that big move to the downside, and then boom, guess what? All-time high comes up again. So are we setting ourselves up for another all-time high? Now, Dow Jones barely down, but crypto now down $33 billion. Again, Jane Street is doing it. We're going to talk about Jane Street in just a moment. So back into the chat. Hope you guys are having a good morning. Good morning to everybody who wasn't here for the beginning. That's DJ and Brian in the house. Selmo, what was it like yesterday? What was it like seeing your ass handed to you on a platter by Caleb the Iceman Williams? Woo, baby. And in 5 days from today, the Bears get a second crack at the Green Bay Packers. What's going to happen when that happens? Woo-hoo-hoo. It is going to be a fun time. So guys, yeah, make sure you hit that like button on the way in. Let's get back into it. Next up here, is the DeFi giant Aave protocol in trouble and a price crash looms? Now, Aave is the largest lender in all of crypto, okay? Aave faces internal debate over $10 million in revenue loss to Aave DAO. The COW swap integration introduces 15 to 25 BPS user fees, which goes to Aave Labs and not the DAO treasury. Founder Stani Kulichov rejects stolen revenue claims, and Aave price holds upside momentum despite conflicts between community members. Now, hasn't really dunked on it, but Aave Labs, a company by Aave Protocol founder Stani Kulichov, announced a partnership with COW Swap for an improved swap experience, including offering better price protection. However, an Aave DAO delegate revealed that swap fees are moving to a private address controlled by the Aave Labs rather than to the DAO treasury. It means over $10 million in potential annual revenue for Aave DAO, which community members argue belongs to token holders. It doesn't, by the way, but they are arguing that. Notably, Aave earlier used Paraswap swap adapters, and surplus revenue flowed to the DAO treasury without charging users fees. However, users pay 1525 BPS fee when using COW Swap, with fees flowing to Aave Labs. Mark Zeller, founder of the Chain Initiative, quoted the situation as extremely concerning, describing it as stealth privatization of 10% of the DAO revenue. Zeller argued that whether Aave Labs will also take revenue from features Vaults, Horizon, and the V4 liquidation engine. Now, Kulichov, to his credit, rejected the claims of any stolen revenue. He claimed that the prior Paraswap fees were a discretionary surplus voluntarily donated to the DAO. He emphasized on the Aave protocol governed by the DAO and the Aave front end maintained and funded by the lab. Also, he argued that since Aave Lab bears the cost of engineering and security for the website, it is reasonable for the company to monetize its own products. And that right there, this is the disconnect that we as a crypto society have from real life. You guys, many people who are in crypto want your, they want everybody to work for free. They really do. I'm not making this up. They want you to work. And by the way, you guys probably know this. They want you as a developer to work absolutely 100% for free. And the only time you're allowed to make any money is after they've cashed out. After they sell the top, then you're allowed to sell your crypto and you're allowed to make money, but only after they sell at the top. So this is just investors who are crying because I can't even explain it to you in a logical way, because guess what? Aave Labs still has to pay for all the development that they do. They still have to pay everybody. It's a job. So where does that money come from? Selling tokens? You're still going to lose if that's the case. And that's what I think some of these people don't understand, because they want to make sure that every dollar goes towards pumping their bag. So it's going to be interesting to see how it plays out. Now let's move on here. $12 trillion Vanguard, still skeptical of Bitcoin despite offering Bitcoin ETFs, calls it a digital Labubu toy. Now, John Amerix, Vanguard Global Head of Quantitative Equity, said Bitcoin looks more like a speculative collectible than a serious long-term investment. Now, I gotta come over here and I gotta look at this guy and see, like, is this guy... No, he's not. I mean, that's a fairly, he doesn't look 9,000 years old. Let's see. When October 17, he was 35 and under, so he was on there. Don't know how, oh, he's born in 19... No. All right, so he's been there for 9 years. I don't know. That picture looks kind of young. It also looks like an old picture, by the way. So I don't know, but they're permitting trading on their Bitcoin ETFs. Now, why are they doing that? Because their people want access to Bitcoin. They want the exposure that comes with Bitcoin and the profitability that comes with Bitcoin. Now, on the short term, doesn't look very good for Vanguard, and that's why they're probably hedging at this point, because some of their people, looking at it at 126,000 a few weeks ago, are saying, hey, wait a minute, I've already lost $30,000 off of my investment. What is going on here? Why would you guys be doing this? So they have to play the game, if you will. But I assure you, when Bitcoin rallies, and it will rally, when it does rally, then they're going to feel really good, and Vanguard is going to soften their approach when it comes down to it. And by the way, remember, why is Vanguard confident in blockchain and not Bitcoin? This is where the divergence is, and this is important. Amerix did not deny that Bitcoin could be needed in certain situations. These include periods of high inflation and political instability. However, he claimed that it has a poor price history because it is short in age. That is not true at all. It's the dumbest thing that I've ever heard the CEO of a $1 trillion company say. He should be all in on Bitcoin at this point, or should have been all in years ago. Now, from a growth perspective, I'm going to say this, and this is going to be the elephant in the room, and you guys are probably going to hate some of it, okay? Bitcoin, as the store of value, only has so much upside left, all right? Could $1 million Bitcoin play out? Yes. Have you bought at 100,000? Also, yes. That means that at best you're probably going to get a 10x. And that's going to take a while. That's another 4 or 5 years from now, at least. There's no way it's going to $1 million right now. So, there's some reason. Okay. If you bought at 16,000, a few years ago, back in December of 22, January 23, if you bought at 16,000, you're already up, 7 or 8. So by the time it finishes its run to $1 million, you're going to be up, 8x, 7x, 6x, 6x. You're going to be up 60x if you bought Bitcoin in December of 22 or January of 2023. You're going to be up 60x by the time it hits $1 million. So there was great money to be made off of that. However, if you're in the position that you're in right now, maybe that exposure isn't as good. So I understand where he's coming from, sort of. And also that they understand that blockchain is the future, but they also understand that Bitcoin is a dirty blockchain that nobody trades on because it takes forever to settle, and it doesn't really have, it's not a place where business gets done, okay? It's just not. When you go, by the way, if you were to go into, this is the problem, okay? If you were to go into a Starbucks who takes Bitcoin and you paid with Bitcoin, it takes 17 minutes sometimes. Maybe up to a couple of hours before your transaction even gets settled. So there's a risk involved on the blockchain. You need that confirmation. What if the transaction fails? The Lightning Network is your only opportunity, and that one still takes, I want to say 3 minutes, something like that. Like, Bitcoin is not the catalyst right now that you think that it is. Ethereum is the one, and Ethereum is the blockchain that makes everything work. As a matter of fact, we just talked about Aave. Aave is built on the Ethereum chain, or it started on the Ethereum chain. So it is where business is done right now. So I think that ultimately that Vanguard is going to have some merit to some of what they're saying. Now, let's talk about the ghouls and the goblins, and let's talk about the horrible people and the scumbags and the dirt, filth. Did Jane Street cause another 10 a.m. Bitcoin dump today? Now, claims that Wall Street trading firm Jane Street triggered a daily 10 a.m. Bitcoin dump resurfaced on December 12 after Bitcoin saw a sharp intraday drop. Social media speculation once again pointed to institutional traders and ETF market makers. A closer look at the data, however, tells a more nuanced story. The theory suggests that Bitcoin often sells off around 9:30 to 10:30 a.m. Eastern Time when the U.S. equity markets open. Jane Street is frequently named because it is a major market maker and an authorized participant for U.S. spot Bitcoin ETFs. Now, that also you should know that all of their spot Bitcoin ETF is in BlackRock. The allegation claims these firms push prices lower to trigger liquidations, then buy back cheaper. However, no regulator, exchange, or data source has ever confirmed such coordinated activity. And by the way, it doesn't matter whether this is where you are bought and paid for. Okay, be in crypto. I don't know that this is or is not sponsored content, okay? The theory suggests that Bitcoin often sells. The allegation claims these firms, and here we go. There's the dump, 10 a.m. activated, and it says, from bull theory. Breaking, a 10 a.m. manipulation is back. Bitcoin dropped 2,000 in 35 minutes, wiped out 40 billion from its market cap. 132 million worth of longs have been liquidated in the past 60 minutes. This is getting ridiculous. Why Bitcoin always dumps at 10 a.m. when the U.S. market opens? Today, Bitcoin erased 16 hours of gains in just 20 minutes after the market opened. Since early November, Bitcoin has dumped most of the time after U.S. market opens. The same thing happened in Q2 and Q3. So, now, Bitcoin traded sideways. The sharp drop came later in the session, close to midday U.S. hours. Bitcoin briefly fell below. And by the way, let's start off with this. Once you destabilize the price, once you've made a move, once you've pulled a Jane Street, as they say, once you've done that, and by the way, the reason that people are tracking this and the reason that this guy is wrong about it, here we go. Liquidation data provides a clearer explanation of the past 24 hours. Okay, so here's the problem, okay? The problem with what this guy is trying to say, no single venue led to a sell-off, why the Jane Street bots already entered Polymarket. While most traders, while most traders chase narratives, one Polymarket account turned 15-minute crypto prediction windows into a mechanical profit engine. Traders didn't build a sophisticated arbitrage bot. He found something simpler, momentum lag on Polymarket. Okay, so Jane Street's visibility in ETF market makes it an easy target for speculation, but market making involves hedging and inventory management, not directional price attacks. But market making involves hedging and inventory management. Okay, so if that's what we're talking about, then here's the inventory management. Here's the hedging. What they're doing is they're selling on a profit every single day. Then they're creating a dip when they sell off. And then they are shorting their positions through their private channels, making money for that downside move to come. And then they're buying again and they're shooting the price back up when they stop selling. But it's happening every single day. And by the way, once everybody notices that it's happening, guess what? Everybody else contributes to it, which creates a bigger cascade. This is not just Jane Street. This is led by Jane Street. And then after that, you have the minnows, you have the lampreys, you have the leeches, the bloodsuckers, the ghouls and goblins that start to take advantage of that situation so that it happens and they also get profit off of the move. So that's why the liquidations keep getting bigger and bigger and bigger and bigger. Also, it should be known per some insiders, and I won't say, by the way, I might actually have it right here. Everybody's talking about it, by the way. Okay. Midday crash on Binance, the role of Jane Street and speculations about a $90,000 dump. Why Jane Street is being blamed for Bitcoin's decline. Did Jane Street cause another 10 a.m. Bitcoin dump today? Everybody's talking about it because everybody sees the writing on the wall. Bitcoin is Wintermute trims Bitcoin exposure as Japan volatility builds. Why is the Bitcoin price down? Analyst calls out trading desk for triggering crashes. And by the way, we're now down $40 billion. I want you to look at what happened in the market on the 1 hour chart. It's very simple. The US market, I've told, and guys, I can't even explain how many times I've told you this over the last year to two, to be honest with you, I've been telling you this for years. Here we are, the US market. And by the way, Dow Jones only down 40 points on the day. So trading at or near a record high, while crypto, for some crazy reason, has this massive sell-off every time the US equity market opens. Now, what is that all about? I mean, guys, it's right in front of you. I never had the name Jane Street to put to it. That's something that I'm recently figuring out or recently learning as we go. But I mean, it doesn't get any clearer. It doesn't get any clearer that somebody is manipulating the market at the same time every day. Now, here's the other part. The reason that people figured it out that it was Jane Street is because after this happens, and by the way, this is every day, okay? This is every day. When this happens, then you get whatever purchases are happening right there. Guess what happens? Jane Street, ironically, is accumulating more Bitcoin. During the dip, every single day. That's how people started to piece it together, because they found out that through the Bitcoin ETF on BlackRock, that Jane Street was the one that was doing it each and every time. So, and it's always the same. It's always the same. The sell-off starts at about 9 a.m. And then once that dump happens, then that leads into this buyback, and they're doing it every single day. So let's move on now, because we can't keep talking about Jane Street, because those goblins are the worst. And it's the American market, by the way. Let's be very, very clear. Donald Trump has failed crypto. We talk a good game. I voted for, we're getting what I voted for, sadly. But what I thought was going to happen is I thought we were going to have a pump, that he was going to lead the U.S. to a new age of prosperity. And some of you right now are thinking to yourself, yeah, but you got to give it a little more time. Yeah, okay. The markets are still ripping. Crypto market collapsing. Donald Trump deep in the crypto market. Now, let's take it one step back, right? It's not because of Donald Trump. He's not doing something to screw the markets. But remember people like Vanguard. Remember people who don't like crypto. Guess what? They're the market movers. They're the market makers. They're the ones that are doing these things, okay? It's the bigs out there, because that sell-off doesn't happen because LEO trades or Cryptos R Us, not because they sell their Bitcoin. That's not why it happens. It's because of institutional involvement, and because the Donald Trump administration turns a blind eye to that manipulation. By the way, at some point, there's going to be a reckoning, and there's going to be a realization that the Trump administration is no different than every other single administration throughout history. The only difference is they don't like immigration. Not the same way. They like the legal immigration, but helping other people from other countries leads to illegal immigration, stuff like that. That's going to be the difference. They're shoring up the borders and stuff like that. But when it comes to finance, all they care about is how they protect millionaires and billionaires, okay? That is the only thing that matters to every single administration. It is not different. And by the way, when you talk about, and remember, I want you guys to know that when you talk about the tax cut, right? People literally said, because they don't understand, this is the largest tax cut in history. Okay, it's also the largest deficit in history. And he also told you yesterday that $18 trillion has been brought in by tariffs. That number is 100 billion, just for clarity's sake. Some friendly estimates put it closer to 200 billion, but it is most certainly not $18 trillion. So guys, it is for the wealthy that everything is being done. Nothing has changed fundamentally. When Donald Trump tells you that the prices are way down, when everything is so much better, all you ever have to do is go to the store and tell me, is it? Is it? Because it's not. But if you're multimillionaire, it doesn't matter, because you've already made it. And that's who's getting taken care of. And by the way, when I say that, I'm not, again, this is just the game that's always been played. Now, let's go into chat so you can tell me, oh, no, it's not. Oh, yeah, Roy G says, rest in peace, meathead. Isn't that a crazy, crazy, crazy story? Ooh, that is unbelievable. That is unbelievable. For those of you that don't know, Rob Reiner was murdered along with his wife, Michelle Singer Reiner, in their house. And the allegation right now is that Nick Reiner, their son, is the person who did it. And the body was discovered by Rory Reiner. The bodies were discovered by their daughter, Rory Reiner, in a just an absolute tragic circumstance that MAGA is calling, yeah, baby. And I don't understand, by the way, after everything, Stand By Me, after, was it Ferris Bueller's Day Off? I mean, this guy, The Princess Bride, after all of those, I don't understand, why is the White House not flying the flag at half-mast? I mean, we have to have a wife named Erica who has you executed by Israel in order to did I say that out loud? I didn't mean that. What I meant to say was, you know, something weird happened from a Seoul, Troy, you know. You guys know. You guys know. You know what I mean? You guys know, right? Anybody see that video of Erica using fake tears before she went on stage? Anybody? Or is it just me? Oh, Candace Owens, be careful today. For those of you that don't know, Candace Owens and Erica Kirk are going to be meeting because they've been feuding on X for the last couple days. Now, back to Ethereum here. Is the Ethereum price set for a rebound as a prominent whale accumulates 119 million after the dip? Now, as reported by Look On Chain, a large whale resumed Ethereum accumulation at the time of the dip. The speech borrowed 85 million USDT on Aave and sent the money to Binance. Soon after, it sold 38,000 ETH valued at about 119 million. This move came after previous accruals of 489,000 ETH close to 1.5 billion. This kind of positioning is an indication of calculated exposure in times of weakness and not defensive selling, which strengthens the presence of demand around the important Ethereum price levels. Meanwhile, the institutional demand reinforced the price dynamics of Ethereum. Weekly ETF inflows on ETH were 209 million. BlackRock alone bought roughly 138 million worth of ETH in the last week. So Ethereum ETF inflows are continuing to happen every single day. So it could stand to reason here that these smart guys with their smart big money, they're not doing it because they think price go down. Okay, let's just leave that and move on. JP Morgan has launched an on-chain fund again on Ethereum. Again, Vanguard saying that, you know, we're not big fans of Bitcoin, but we are on blockchain. Everything's being built on Ethereum. Ethereum expands as JP Morgan launches an on-chain fund, and you're not bullish enough on Ethereum. By the way, I'm still out on Ethereum despite all of this. I haven't changed my prediction was 6,000. I had some people tell me 7,000 to 8,500, and I believe I even put it on the chart at one point and said, you know, maybe let's look at it from that standpoint, and maybe we'll see, you know, we'll see that happen from 7,000 to 7 to 8,000. There we go. But right here, this is me telling you that I think that Ethereum is going no higher than 6,000 in this cycle to begin with, and you know, so far not even close. But also, if you look around the horn right now, we're down $50 billion on the day. Down $50 billion. And Dow Jones, 100 points, down 100 points. Down 0.19%, while crypto continues to get absolutely wrecked by these ghouls and goblins in the US market. I can't believe that you guys trusted these people with your money. Next up, world's highest IQ holder projects $100 XRP in 5 years. What does he know? Isn't this that little Asian kid from the Big Bang Theory, by the way? You guys know what I'm talking about. World's largest IQ holder made a new bullish projection for the XRP token. Experts have asked on what basis he is making the projection, calling it unrealistic. Young Hoon Kim, officially recognized as the world's highest IQ holder, projected a $100 price target for the XRP token in the next 5 years. The crypto community has been interested on how he arrived at his projection. He recently said in an X post that the token can reach 100 by 2030. Currently, he has a verified IQ score of 276. This will mean that the market cap of a token will be approximately 5.5 trillion based on the current supply and circulation. This is much higher than the complete crypto market cap at present. Those opposing his forecast claim it is not realistic. Argument in support of his spending proposition state that this calculation does not factor in any changes with which can raise demand. They added that Ripple's move to be a charter bank could be key. Furthermore, a large part of the token is still locked in escrow. This reduces the liquid supply and might boost price movement in case demand suddenly starts starts picking up. Kim said this is an institutional interest continues to build. U.S. spot XRP ETFs have recorded 30 consecutive days of inflow since launch. This is while Bitcoin and Ethereum products have experienced periodic outflows. All combined, the ETFs have pulled in nearly $1 billion in net inflows, while total assets under management have risen to $1.18 billion. This momentum accelerated last week after a fifth ETF product started trading following fresh approval from the CBOE. Now, Gemini introduced support for Ripple's RLUSD stablecoin on the XRP ledger. On-chain analysis reveals big investors continue to conduct most transactions despite this asset being near a yearly low price. So what we're seeing is we're seeing a huge amount of accumulation. Again, if you're bearish on the market right now, that's fine. But what you're seeing right now is you're seeing the whales continuing to accumulate at high levels. Why do they do that? They became whales for a reason, because they bought the dips and then it benefited off of the rips. Guys, I'm telling you right now, we are not done with this rally. Also, Michael Saylor buys 10,645 Bitcoin as crypto market braces for Japan rate hike. Now, why would Michael Saylor buy 10,645 Bitcoin if he knows that if he just waits 1 week, he might get it at 70,000? Because he understands fundamentally that because everybody is saying that the market is about to dump, it most likely is going to pump. And he's going to look like a genius when it all comes down to it. By the way, his DCA is somewhere in the neighborhood of 74,000 at this point. So unbelievable. Now let's go to Kobayashi. U.S. labor market coming to a halt. Total non-farm hiring fell minus 0.2% in October to 3.2%, the lowest since the 2020 pandemic bottom. Over the last 4 years, this figure has declined 1.4 percentage point to levels in line with December of 2008. Now, if you look at it over 4 years, it went down minus 1.4%. Last month, minus 0.2%. It's getting worse under this administration, not better under this administration. So, is a Santa Claus rally on the way? Since 1929, the S&P has risen 79% of Santa Claus rally periods with an average return of 1.6. The Santa Claus rally covers the last 5 trading days of December and the first 2 trading days of January. So, are we going to get that Santa rally? I don't know the answer to that, but we'll see. Also, breaking, President Trump says the U.S. is taking in $18 trillion due to tariffs. That is a ridiculous number, okay? As a matter of fact, I think Grok checked it. Grok, how much revenue has the U.S. collected in tariffs? Let's see. Did Grok answer is the question. Donald Trump said we collected 18 trillion in tariff revenue. Is this number accurate? I said funneled. Trump. Grok was unable to reply. Okay, so there must be something wrong with Grok right now. Let's go to this. And then let's go to... Did I just get fucking cock blocked by Grok? Oh, Grok is down, by the way. Okay. Wait. How do I access Gemini? To be honest with you guys, I've never used Gemini. Oh, there it is. All right, let's see. Taking a look at the new tab. The claim has been collected is not accurate, according to... Okay, well, we know that. U.S. government has collected, through December 5, it's collected $259 billion. And for fiscal year 2025, it collected $195 billion. I have no idea. Guys, these numbers are made up. If you don't see it, these numbers are just manufactured and made up. All right, so we got no peak indicators hit. Terra Casino for all your risk-based gaming. By the way, if you bet on the Bears, 31-3, dominated. The Green Bay Packers annihilated by the Denver Broncos by almost 3 points. Or 8 points, whatever the final score was. And the Detroit Lions ended up taking the L as well, I think. Minnesota Vikings, I don't know, I think Minnesota might have come through at the last moment. J.J. McCarthy had a couple of touchdowns, not to Justin Jefferson if you have him on your team. Whew, boy, Justin Jefferson fans are not happy with J.J. McCarthy right now. Unbelievable. So certainly check that out. If you want to trade meme coins or utility coins, I recommend on terraport.finance, I recommend to you guys, and I'm not telling you what you should do, but I am telling you that there are several different utility coins that you need to have. Some Selenium, some Juris Protocol, some Garuda X, and some WISO World. I think you should have those 4 coins. Selenium, Juris Protocol, WISO, and Garuda X. Those are the 4 that I think you should have if you don't already for the Terra Luna Classic blockchain. By the way, Terra Luna Classic blockchain taking a hit now, coming way back down after that big spike from Do Kwon. Look, I'm reticent to dump on Dev because I understand what's going on. It's frustrating that they don't care about what the investors are feeling, the exasperation, stuff like that. But listen, they don't control that, and they can't do anything about it because they are ill-equipped to deal with crypto. If you guys don't know, Tom Anderson, the guy who created the Dev blockchain, he also created haptic feedback in your controllers. Like, he created a haptic feedback controller and patented it many, many years ago. So, like, we're talking about a real sharp guy. So, and by the way, no, I don't know anybody who has this controller that he created, but a lot of people did have it to play video games way back in the day before I think the patent for it was licensed out to people. So, yeah, Tom is no joke. But I don't think he cares about crypto holders because that's not, and by the way, that doesn't mean it, I don't mean that to be disrespectful. I just don't think they care about the crypto holders. I mean, either hold or don't hold, they're going to do what they're going to do anyway. And when they got that, let's call it a bridge loan for $1 million from DevStream, that was in order to continue funding and financing what they're doing. I don't know, it's going to be over 3 years, I think. They bought $1 million this year, or they're buying $1 million this year. Then they're going to do $1 million next year, and then $1 million the year after that, 3.2 million, something like that. So I don't know what's going on. And I guess just, sit quietly and wait. And then if you, by the way, don't like it, sell. You know what I mean? Like, that's basically that. And look, by the way, look, I should point this out. Like, I'm not dumping. I'm not dumping, but I am being honest. Okay. If you go down here and you look at everybody talking in this chat, there's like 5 people and 10 mods. So nobody's paying attention to Dev right now. Nobody cares. Nobody's doing anything. Everybody is kind of just sitting back right now in wait and see mode, hoping for something positive to happen. So I am too, by the way. So we'll see. All right. So in the CNBC crypto bubbles, they're called the banter bubbles, but according to inside sources, Rand Nooner works for CNBC. So Mix up 12%, Knight down 13%, Tau down 5%. We're just a bloodbath everywhere as the market is again extracting liquidity so that the ghouls and goblins can do whatever it is that they're going to do. Beat, by the way, up 92% on the day. So if you had a bag of Beat, shout out to you. You just won the crypto lottery, at least in 1 month, up 4x. In 1 week, up 65%. In 1 day, up 92%. So if you got in on Beat, congratulations. That was a good win for you. Let's see what else is going on out here. NISA down, REC down. Nothing really of note. Form, Jelly, Luna down another 11%. Lunk, all of them down. Centus. By the way, let me go back here. I want to go back here because some people have been asking me and talking about Dev. Like, when Dev makes an announcement, what's going to happen? The same shit that's happening right here with Beat. It's just going to keep going and going and going. That's what's going to happen because it'll increase exposure, and it has nothing to do with the status of the market. On a day right now where this total market cap is at 2.94 trillion, because these goblins in the US are selling off like clockwork, again, Jane Streeting it, beats up 100% on the day, 400% on the month, while the rest of the market is dumping. It doesn't matter if you fundamentally have something worth investing in, people will invest in it. There's $3 trillion in this market right now, and don't think for a second that of the stablecoin volume here, which is currently sitting at, that's not the percent, that's dominance, $318 billion is sitting in stablecoins right now. $318 billion is available to be moved into Devi at any point. So, you know, I'm not worried about whether or not there's going to be a pump or anything like that. Like the money is in the market right now. It's just in, it's either stabled or in different assets. So we'll see what happens. Back to extreme fear at 16 as the market again continues to extract liquidity. When you look at, again, the market here over a shorter time frame here. Let's go to Bitcoin on this one, and we had this leg down. We had a bunch of shorts taken right here. Do you see the setup yet? I want you guys to see. There's so much money. Everybody's shorting the market right now. Again, we've got all the news telling us that this is going to happen, that the rate hike is coming from the Bank of Japan. And what's happening right now? Everybody is shorting the market. What does that mean when everybody shorts the market? It means we're going in the opposite direction, guys. I'm telling you right now. Doesn't make any sense what's happening right now. So ETFs, we had massive inflows from Bitcoin, $50 million on Friday for the Ethereum ETF. By the way, it's going to be outflows today because people are going to sell off because Bitcoin price going down. 19 million in outflows on Ethereum. XRP had 20 million in inflows, another bang up day for XRP. Solana had another bang up day, 2.5 million in capital inflows. So again, the rich, the asset managers, they are still accumulating Bitcoin, Solana, XRP, and Ethereum. They're still continuing to do it. Now, the place where they're not doing it is Dogecoin. Dogecoin to me is dead at this point. So I don't know what you think, but doesn't seem good. Now, top four, remember, we're looking for like 10 to 12 billion to say that we've got some kind of volume. Look at how low that is. Retail has exited the building. We are at 4.2, 5.6, 5.7 billion dollars from the top four, and it's not even close anymore. So money, retail is sitting on the sidelines. Retail also, by the way, is being told that we're about to dump super hard. They're being told all of these things. They're being told that it's all over. That is the setup for a rally. And by the way, when I say a setup for a rally, doesn't mean I could be completely wrong and we're not going to pump anymore. Like we could be in the bear market for, you know, I mean, it is fair to say at this point that people like Jane Street, people like Wintermute, like these companies, they control these markets. They control it. So it would be safe to say that there is a real possibility that that we're in a decline. It is potential. All right. However, they wouldn't still be accumulating at this position if they were sure the price was going to keep going down. I just want you to just let that sink in for a little while. They would not be doing what they're doing right now and accumulating as much as they're accumulating right now if they thought the price was going to continue dipping. They would all just wait until 75,000. They would all just wait until 50,000. They would all just wait until that position to start their massive accumulation. Now, Connor, Crypto Connor, he put out a video, which, by the way, fascinating video. I'm going to do a similar one because I was asked to do one. And he was talking about, you know, how he was buying Bitcoin. And he said, you know, how did I buy Bitcoin at 16,000? Well, I bought at 50,000 and I bought at 35,000. Then I bought at 25,000. Then I bought at 20,000. And then I freaked out and bought at 16,000. But I didn't know it was going to reverse at that point. So, you know, I DCA'd my way down and I ended up buying a bunch at 16,000 and then it reversed. I mean, that's really what happens. A lot of people say they want to buy the bottom, but nobody ever really buys the bottom. You DCA your way down, and then you start taking your profit and DCAing your way out when you start to realize some of that profit along the way. So, all right. Stablecoins circumvent the Dodd Act through the Genius Act and lets banks invest in non-regulated investments. Stocks going down. Bitcoin 87, more like lowest IQ. He said it's going to dump. It's dumping. Strange. We cannot hear you. Oh, you can't. Your sound is. I'm not. Is my sound really off? I don't think so. I think I was having some kind of. That might be why Grok wasn't working. Maybe I lost my connection for a second or something like that. So, I mean, we'll see what happens. You know what I mean? Anyway, that's going to be it. That's the show. Thank you so much for tuning in, guys. I appreciate you. Again, if you've noticed, there's different content coming out on the channel. You will also notice that I think I want to show you this. I changed some of the way that I do my thumbnails and stuff like that. And I wanted to show you that as I'm going through this stuff, like I'm navigating. I'm navigating through the videos here. So we're doing things just a little bit different. I'm not done with it yet. I was not happy after I did this for a little while. You'll notice that backer right there. You'll notice the backer that I have today, a little bit less, a little bit more muted. I wasn't happy with those bright backgrounds and stuff like that. Trying to simplify the arrangement, if you will. So a lot of these videos you're going to see over the next couple days. Again, I'm just trying to simplify the way I'm putting out content and what it looks like when I do it. But as we go, you're going to see me simplify some of these thumbnails over time. And, you know, I hope you guys appreciate it. I hope you guys like what you're seeing. I want to get some similarity to it. I want to get some, I want to get some sameness to it. Like you can see right now, when I do the Terra Luna Classic right there, it's going to be like yellow and blue. Again, I'm just trying to figure out different ways. The one thing that I was told by the management company is, for the love of God, you got to stop putting that Terra Luna Classic logo. And then I realized, like, oh, also I got to stop putting my Terra Luna Classic. I got to stop talking about it as Terra Luna Classic. I got to come up with a signal here that, you know, like the yellow and blue font or something like that to tell you that it's Terra Luna Classic. You know what I mean? Like they're just, I got to come up with something a little bit different so that I can grow the channel, because it's difficult for most people. I don't believe that it's a dead coin, but other people do. So it's very difficult to grow when that's happening. So, yeah, so we're going to work on that. We're going to see what happens. By the way, if you never saw this, let me show you. This is my neighborhood. This was in 12 years ago. This was me filming on my street. We had a microburst tornado, and it just destroyed the front of this guy's house.
He doesn't have a camera.
Oh, really?
And I'm like, take pictures for insurance. He goes, I don't have a camera.
Whole thing, just absolutely crazy stuff. Anyway, that's the show, guys. Not financial.